Hey, well, how do you become what's known as an accredited investor? You've probably seen that term around. And what are the benefits? What are the upsides of actually becoming one? Stick around, and by the end of this video, you're going to have the answers to this, as well as some updates and some potential changes that are coming to the accredited investor status. I'm also going to show you one or two real-life examples of real accredited investments that you could potentially get into. Yeah, you could potentially get into them if you learn that you are an accredited investor, and this could open up a whole new world of more lucrative investments and more cash flowing investments to you that aren't available to most people. But don't get it wrong, these are investments. You could still lose money. Be sure to keep that in mind. Hi, I'm Keith Weinhold. This is GRE. So how do you become an accredited investor, and who really even checks on your status to be sure that you are one? There are three main options on how to become an accredited investor, and it's the SEC, a federal government agency, the Securities and Exchange Commission, that checks on these three things. So the first way to become an accredited investor is that if your income exceeds $200,000 per year, with the expectation that that's going to continue to happen, or combined with your spouse, your income is $300,000 per year or more. Now, the really great thing about being a real estate investor is, say that you own 10 rental single-family homes and they all have $1,000 of rent on them. Well, that's $120K in income, and right there is 60% of your qualification. The second of three ways you can become an accredited investor is if your net worth exceeds $1 million. And that can even be combined with your spouse. That's probably the easiest way to qualify. If you have a $1 million net worth or more, individually or combined with your spouse. However, in either case, your primary residence is excluded from that net worth calculation. Your own home doesn't count in that. However, all of your rental properties do. And the most commonly understood definition of net worth is the value of all of your assets. Say that's $2 million if you add up the value of all of them, minus all of your liabilities. Say that were $500,000. So $2 million in assets minus $500,000 in liabilities means you would have a net worth of $1.5 million, and therefore you would qualify. The third of three options is to prove yourself that you are competent in making your own financial decisions. Gosh, that one sounds kind of funny, doesn't it? There are a few ways to prove this. Say you happen to work in the financial industry and you work at a hedge fund. Well, you could qualify for what's known as a knowledgeable employee. That's the term. And there are actually a couple tests that you can take to help prove that you are a knowledgeable employee, capable of making your own investment decisions. For example, if you pass the test to become a stockbroker, or the test to become a financial advisor, there you are, you're in the club, and this now allows you to be an accredited investor and invest like the whales do. Those are the three main ways, but there are some more important things to tell you here. These minimums, what they're designed to do by the SEC is to basically protect investors from getting in over their heads. I don't know that it's the best way of doing it, but these are what the rules are. We're going to talk about what might be changing next, but it's so that, for example, say you do have a net worth of just $1 million. Well, a lot of these accredited investments have minimums. You have to put in a minimum of $50K or $100K. So what if someone with a net worth of just $1 million has a minimum investment amount of $100K to get in this investment? Well, now they've got 10% of their net worth tied up in that investment, and that puts some people at risk in the SEC's eyes. Now let's look at what accredited investors can invest in. If you pass that test, if you've met that bar, here's what you can do. And understand that I am not a legal professional or attorney of any kind. This is all just ideas and information. Before we talk about what you can invest in, go ahead and put a like on this. It doesn't necessarily mean that you like that the SEC requires this, but I'd really appreciate the like if you like some of this information that you're getting here. So as an accredited investor, here's what all you can invest in: venture capital, angel investments. I guess that sounds pretty cool if you're a venture capitalist or an angel investor, but hopefully you're getting into good investments, so you're not just trying to give yourself a cool moniker. Or real estate investment funds. Sometimes these are called real estate syndications. Syndication is kind of a funny sounding word. It sounds like you're doing something with a mob or something like that, but it has nothing to do with that. A syndication just means a number of investors all funding a fund, pooling their money together. Like say, for example, all going in on a 400-unit apartment building in Houston, something that you, even as an accredited investor, probably could not afford yourself. Private equity funds, hedge funds, or specialty investment funds, for example, like those focusing on cryptocurrencies. These are some of the investment types that you qualify for as an accredited investor. We're going to look at some specific real-life investments shortly. Now, it is common for an accredited investments sponsor, the sponsor being that person that identifies the deal and putting it together, for them to request documentation of you to help confirm that you're an accredited investor. Things like your income and your net worth verification. And this could be things like your bank and investment statements, proof of securities licensing, or your employment and your tax returns. Now, alternatively, I see a greater preponderance of these third-party sites like verifyinvestor.com. Here's a site that you can go on to help independently verify your accredited status. So even that investment sponsor can verify you, or you can upload the documents to verify yourself here on a site like this, and you can check out the pretty low price there. Let's talk about some recent changes. You know, only about 13% of Americans would qualify for the accredited investor status just based on the net worth or income options. Again, that third one is if you're a knowledgeable employee, a little review there. And it wasn't until 2020 that the SEC updated the rules to include that third option. Now, the SEC is somewhat controversially putting forth even more accredited investor change ideas. And why is that? Well, one reason is there are twice as many investments out there for the accredited investors as there are for the non-accredited investors. You can see this in the private versus the public offerings. In fact, in 2019, there were $2.7 trillion worth of private offerings, think of Robert Kiyosaki type investments, and just 1.2 in public offerings, think stock exchange and IPO. Let's talk about potential future rule changes here. The SEC has expressed that they do want to change the rules, but it's not clear if they want to expand the definition to include more people or raise the threshold to keep more people out. Some lawmakers are a little perturbed that they want to change the rules again after just changing them in 2020. One further idea put forward by the SEC is to expand the list of required disclosures. This would make it so that every investment kind of offers this extra layer of protection for investors, a little bit like how you have to opt in for internet cookies when you land on a website. Now, the SEC has already passed a final rule as of 2020, expanding the definition of an accredited investor to get certified by passing an exam. But the problem with this is that as of today, no one has actually been certified to award these accredited examinations. So what we do is we kind of continue to wait on the SEC to release the certified companies and what exactly the requirements are going to be for an exam. Now, recent chatters in the SEC circles has the SEC increasing the $1 million net worth threshold requirement. And in fact, a recent Bloomberg headline that implied that the new threshold could be as high as a $10 million net worth. Yeah, going from 7 figures to 8 figures then. And really, an eventual increase by the SEC does make sense. That $1 million net worth threshold, that was instituted in 1982. So if you'd adjust that for inflation there, that's 40 years ago, that would be about a $3 million net worth today. So really raising it to that threshold of $3 million or more, that actually does make quite a bit of sense to me. $1 million net worth is just nowhere near wealthy anymore, maybe even below middle class, depending on where you live and what you do. So that's the end of the potential future rule changes. A couple other notes about being an accredited investor are if you're an investor's relative, if you're an investor's spouse, or if you're the relative of an investor's spouse that lives in the same primary residence, then you are the equivalent of an accredited investor for the purposes of an investment. And the bottom line is back here on a site like this, I suggest using a third-party verification company, whether it's verifyinvestor.com or some other site, because it is an easy and inexpensive way to offload your risk of verification onto another party. And once you get the verification letter from the third party, which is usually from an attorney, you are good to go. You are all set. Now, something interesting, something that you can look at in real life. Let's talk about 2 real-life accredited investments. The first one is kind of on our side here at GRE, and then the second one is outside of us, and that is with ATMs at gremarketplace.com/ATM is how you can learn about this. Yeah, I know it kind of seems like, oh, who really uses ATMs anymore? A lot of people, especially people on the lower end of the financial spectrum. It's remarkable. In fact, this ATM investment, which you need to be accredited to get into, is the highest cash flowing investment I've ever heard of in my life. You buy a lot of, it's 6 or 7 physical ATMs. The equipment value does depreciate over time. It goes down in value, but expect a cash-on-cash return of 24% plus on these ATMs. Again, that's at gremarketplace.com/ATM. The other one is IAccredited.com. It's the letter I, the letter M, accredited.com. It's where a long-term friend of mine does real estate syndications. Often you get paid 10 to 12% preferred returns, meaning that you get paid before anyone else does. So you can just register your interest here and you'll be the first to know as soon as they have available investments. And you do want to do that if it sounds like it's of interest to you, because they do take a limited number of investors. That's at IAccredited.com. I hope you've enjoyed this overview of what it takes to be an accredited investor. Again, the 3 main ways are with the income qualification, the net worth qualification, or being a knowledgeable employee. I'm Keith Weinhold. Thanks so much for stopping by. I'll see you in the next video.